Yeah, hello and welcome to another update video about gold. Gold has rallied quite substantially off the recent lows here that were made in November, middle of November. Just wanted to do a quick update after my last video in which I highlighted to you that it's pretty probable that we get one more low here into this support zone and basically one more low to complete this ABC pullback of the recent highs that were formed here at around $2,150. Remember that we potentially see this here, that different ways how this can all be seen, okay? There are different ways how you can count this. I can even count the move up of the October lows as a wave 1 instead of an A wave, the move down as a wave 2. I decided to go with AB, and then the C wave is unfolding right now. There are also different ways how this can play out. But I want to show you two of the, let's say two pathways that I see as most likely at the moment. It is a fairly bullish structure. We have also rallied quite substantially off the October lows. And my take is that either, and I showed you that in the last video already, that we either completed within this C wave, yeah? So we have here an A, B, C structure, or part of a larger diagonal in a third wave, but that we have 3 waves up so far. The move down should, however, be complete if this is a wave 4. Okay, if this is a wave 4, the move down should be complete because I can count, just to zoom in a little bit, I can count an A wave, a B wave, and then I've got 5 waves down in wave C. Technically, I would say this move down could be complete, but price action of the lows, they don't really, that price action doesn't really excite me too much. So we have still, though, an ABC structure to the downside. I've got 3 waves down that I can count. One more low would shift probabilities towards another scenario. And the alternative scenario, so in this one that I have on the chart, ideally we are moving up in a wave 5 from here. Yeah. So it will be that next rally that will tell us basically what's going on here, because if the next rally is corrective, then it's likely this. So I would then argue that, okay, we moved down in an A wave, get a B wave rally and come down once more in C. In this scenario, I have to assume that we already have 5 waves up. Yeah, these are basically the 2 scenarios. Let me explain again. There is the wave count in which we only have 3 waves up, and this would be the wave 4, but it should really not go much lower. And then the wave 5 could start from here, should take us higher. It's certainly above $2,150. There is a way of counting this move already as a 5-wave move, and I shared that with you in the last update. It's also actually a decent wave count. Yeah, it's possible. And then we would argue, okay, 5 waves up. Yeah, this could be a larger wave 1, and then the move down is a wave 2. But that will become more likely if we have a corrective rally next. So if in a corrective rally the price cannot exceed 2,150, then I would prepare for another pullback into the support zone, because then it's too deep for a wave 4, but it could just be a wave 2. So then this would be a wave 1 and this a wave 2. So actually 2 straightforward counts. So either we rally next in an impulsive fashion, make a new high in a wave 5, or if not, then we have to prepare for another dip deeper into the support area, possibly to 2017 or 1982. Below 1982, we would have to rework the overall chart. Yeah. So at the moment, this here is based on the, let me just shift that back. At the moment, this is based on the assumption, no, didn't want to do that. Okay. Based on the assumption that we are bullish here, okay. Any break though below 1982 will cause a risk of invalidation. Now the real invalidation point is not reached until we break below 1935. Obviously, we are sort of in all-time high territory, and that just makes it a bit tricky because there's a lot of selling pressure and so on. But overall, I see this still as a rather bullish structure until I see further evidence that would suggest it's not. But for now, I'll focus on further upside. What I explained to you, though, is that we need to be a little bit flexible with regards to the micro counting here, because the micro counts, they shift, especially if we have a diagonal pattern here, then we need to remain flexible. That's sort of all the clarity I can give you at the moment. I think support levels are pretty clear. Below 1982, probabilities will shift towards invalidation gets more likely, and the invalidation point is below 1930, actually 1936 it is. Yeah, 1935, 1936. Not much more to add really at the moment. The price hasn't really moved much since it dipped into the support area. The reaction isn't massive, but we're also still holding above the trend line for now. So that's my update about gold. Hope you liked the update. If you did, please hit a like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter. And if you're interested in daily updates about the S&P 500 as well as stocks, check out our stocks and S&P 500 service. Link to the Patreon membership is in the description. Thanks a lot for watching. Bye-bye.